Are firms really able to pass along input prices these days? And how is Gen Z impacting the economy? I am Jeffrey Roach, Chief Economist for LPL Financial, and in this edition of the Econ Market Minute, I want to give you 3 insights for the week. And so central banking seems to be the hot topic for just about every journalistic story these days. So I want to give you some other things to think about that are especially relevant for you as investors and as business leaders. So here we go. First, demographics are playing a bigger part. And when you think about the aging of our population, remember, baby boomers are not the only cohort aging. Generation Z and millennials are also getting older. And when you think that the median age for a first-time home buyer is 33, you can see that the bubble of the millennial cohort is now right around peak home buying. Also, you can see that the Gen Z individuals, who, by the way, the US Census describes as the young and mobile, well, some of them have already entered the workforce. So here's the kicker, and relevant for business leaders today. Gen Z will account for 27% of the workforce by 2025. That's just in a few years, and given the fluid dynamics of the workforce, a mobile generation, such as Gen Z, will certainly leave an impact on housing, employment, travel, leisure spending, and so much more. Second, profit margins reached a generational high. The second print of GDP from the Bureau of Economic Analysis provides a snapshot of corporate profits in this country. And just released, we see that after-tax profits as a share of output, which is a measure of profit margins, increased to over 15% in the second quarter of this year. That's the most since 1950. So what this shows me is that companies have been able to pass along rising input prices, such as higher cost of materials and higher labor costs. So even though household wages have not kept up with inflation, businesses have been able to charge more to the customers they've kept over this period of time. So given this persistent inflation, global uncertainty, and weakening consumer demand, I don't think this kind of profit margin will last the rest of this year. We already heard from some retailers that higher inventory to sales ratios will likely mean discounted prices to clear those inventories. Now, don't expect that quite yet for your local car dealership. And third, small caps are trying to find a bottom. When you look at the year-over-year change in the ISM composite metric, you can see the relationship with small caps here. I ran the numbers, and I found that there's roughly 72% correlation with year-over-year performance in the Russell small cap benchmark. I think it's worth focusing on this sector of the market and the economy because we are most likely at this strange inflection point of slower growth with headwinds from higher rates, but also at this inflection point where the markets most likely moved past the worry about a hard recession landing and rotating to newer expectations that the US economy will outperform its international trading partners. Pay close attention to this area of the markets going forward. We think there's a lot of information here. Well, that's all for now. Continue to follow me and the LPL research team on social media, and take care.